All right, General Motors out with better than expected earnings, but really all eyes remain on how the business is doing, given what we are seeing with the UAW strike, of course, not only against General Motors, but against all of the big three automakers. Joining us now is General Motors CFO Paul Jacobsen. And Paul, good to see you as always, and thank you for making time for us during these very busy times. And the strange thing is, you actually had a good quarter. What do you see in terms of demand before we get into the strike?
Well, thank you, Brian. First of all, I really appreciate the opportunity to be here and share the success and the results of the entire GM team and what we were able to do. You know, the vehicles that we're producing are the best in our history, and customers are continuing to respond well to them. So it was a really strong quarter for us, notwithstanding the impacts of the strike, which did hit our quarter by about $200 million from the early days of the strike. And, we estimate that so far in the fourth quarter, it's been about $600 million through yesterday.
There's a lot to get into this. I almost don't even know where to begin, but what other financial levers do you need to pull as the CFO of GM to further weather an uncertain just backdrop or uncertainty on how long this strike goes?
Well, I think, whether it's labor or it's the macro economy, the consumer, we've been preparing and making sure that we try to get ahead of cost increases and any downturns as quickly as possible. So earlier this year, we announced a $2 billion cost reduction program. We're well into that. We actually added another $1 billion to that to bring our total cost down by $2 billion net of depreciation in 2024. So we saw some of these headwinds coming, and we've been working proactively to do that. One of the other things that we've done and what we've announced today is, or last week, was the delay of the Orion truck plant 2. We've seen a little bit of a slowdown in the rate of growth of EV adoption. Our EVs are still selling very, very well in small quantities that we're producing right now. But we saw this as an opportunity to delay that a little bit, save some capital. It'll save about $1.5 billion in capital next year, but also given us an opportunity to look at engineering improvements that we've seen through the process that are going to ultimately improve the profitability of that vehicle when it's produced in 2025. So really looking at all corners of the company to try to find savings and a way to keep the momentum going.
Yeah, your CEO, Mary Barra, in her shareholder letter, Paul, said something very interesting in my view. She said she's interested in an offer that does not, just quote, does not put our company and their jobs, the UAW jobs, at risk. Is what the UAW continues to demand, would that put the company at risk?
Well, I don't want to get into specifics. We'll leave that at the bargaining table. But I think what we've said from the beginning is, our employees produce the best vehicles in the world and should be rewarded for that. And we put an offer on the table that does that. And importantly, it allows us to compete in the new sector. When we look at EVs, when we look at foreign competition, that's something that we've got to look out for the long-term benefits of not just the employees here, but the employees of tomorrow as well.
Do you think, from your perch, Paul, that UAW chief Shawn Fain has an end game in mind here? Look, I've been watching his updates every Friday. I see him wearing T-shirts and saying, "Eat the rich." I see someone that is just enjoying this moment to the fullest. What is his exit? When does he come to the table here and meet you some way, toss you an olive branch? Do you even see that happening?
Well, we've had many productive conversations at the table, and I would say that we've made considerable progress, and we've got to get to a point where we close the deal and get people back to work. But I think the tactics and the strategy of the UAW have caused us to withdraw our guidance for the full year. That's predominantly just based on the uncertainty and the scope and the duration of what the work stoppage is, and we don't want to speculate on how long that might be. Clearly, we're at the table and we want to get people back to work as quickly as possible. The underlying business is performing well. Before we took this action, absent the strike, we would have been performing at the top half of our guided range. So the business continues to perform, but it does present some uncertainty that we thought the prudent thing to do was to withdraw that guidance until we have more clarity as to the end of the labor stoppage.
And apologies in advance. I believe you recently took out a new line of liquidity, maybe around a month ago. Are you looking to take further steps now under the assumption this could extend or into early next year?
Well, we've got an incredibly strong liquidity position, and we've got to make sure that we're prudent to be able to protect the pace of investment that we're making, even in the event of a prolonged work stoppage. So, when you look at the steps that we've done, we've taken some steps on cost austerity in the short run in order to make sure that we create the strongest foundation possible. Again, we don't want this to go on a long time. We'd like to get people back to work, but we understand the situation, and we need to be prepared for it.
I think a lot of investors in GM and the automakers, Paul, haven't lived through a situation like this. They have not seen a strike of this magnitude and the vitriol that is playing out on social media. What type of longer term damage do you think this has to the auto industry?
Well, I do think that this is something that, when we can get past this and when we can prove to the market that, we could rise to the challenges of what the higher costs are going to be while still hitting our goals and our targets that we've set out for investors. I think we can recover some of that, but it is going to take some work. There's no doubt this is going to create some inflationary pressure, and we're going to do our best to make sure that it doesn't disrupt us from our targets. But that requires us signing a deal that we know we can be competitive with in the future, and like I said, for the next generation.
The latest offer that General Motors put forward, does that allow you to make money on electric vehicles?
It's going to take some work, but we've got a team that is incredibly innovative and one that we've shown a lot of tactical resilience over the last couple of years, whether it be chip shortages, supply chain disruptions, COVID, et cetera. So, I know we'll be able to find solutions to help mitigate that. But that's what's important, to make sure that whatever contract we sign is one that we can make sure that we can compete in the marketplace.
You mentioned just some slowing demand for EVs, and it's something we heard about from Tesla too, and Elon Musk on his earnings call. Would you attribute that to higher interest rates?
I don't know that it's higher interest rates or it's, the vehicles that are out in the market. When you look at the vehicles that we're producing on the Ultium platform, they are purpose-built EVs. So in terms of range, functionality, capabilities, we believe they're meeting customers' needs. A lot of the vehicles that are out there right now are vehicles that were put together, rushed to market, may not have the same capabilities. So while we're producing in limited quantities and it's certainly growing, we had 2x the Ultium deliveries in 3Q that we did in 2Q. We're moving rapidly towards that. We know that customers love them, and we're in the process of scaling that business up. So we feel good about the demand for our vehicles, but there's no doubt that there's a little bit of a slowness. Now, I don't think that EV adoption across the board is going to be a smooth line. I think it's going to be something that's choppy, and that's why we have such a great hand to play, because we've got a really strong ICE franchise that is doing tremendous things, and the products that we're putting out are better. Customers love them, and they're contributing higher margins as well. So the ICE franchise is doing incredibly well, and we've built a lot of flex in the system to make sure that we can respond to changes in the demand set.
All right, we'll leave it there. General Motors CFO Paul Jacobsen, thank you for giving us time. Again, I know these are very busy times, uncertain times, so we appreciate you making time for Yahoo Finance. Thank you.
Thank you, Brian.